Welcome back to Morning Trade Live. Time to go inside out on Travelers and the insurance industry overall. Cathy, Seifert, Director of CFRA Research, telling us a little bit about Travelers today. You do have a hold rating and a 285 target. What are your thoughts on Travelers? What are some of the themes that you're seeing this year, and are they different than in years past?
Thanks. It's good to be with you. So Travelers posted really good results. There were two things that helped the bottom line here. One was second quarter catastrophe losses this year for Travelers were a lot lower than they were last year. That was significant. Travelers also recorded better prior year loss development, meaning they set aside more money than they needed for certain types of losses. They were able to release those funds, which flow to the bottom line. Those two things really propelled earnings, and that's really a positive. My concern about Travelers, and the reason I'm neutral on this stock, is that top line growth is slowing. Year to date, written premium growth, which is the production number that flows into next year's revenues, was only up 3.4%. That's barely in line with, inflation. And so you could see a slowdown in revenue combined with the potential transitory nature of some of the earnings boost this quarter, leads me to be a little cautious on the shares.
Understood. I mean, the things that are working right now, it's good to see the year-over-year numbers. You talked about catastrophes, losses down. That was good. They set aside more money. That's good. They're putting that sort of ready for the tuck fund, I like to call it. What are some other things that are working for Travelers and or the insurance industry overall, whether it's regulation or other things that could help a name like Travelers?
Sure. And so last year, if you remember, property casualty insurance stocks were, I believe, the best performing financial subgroup. Investors bid up the shares because they believed, and rightly so, that the industry had pricing power. That pricing power led to significantly improved profitability for this group. It's a little counterintuitive, but that increased profitability is likely to swing the pricing pendulum back to a more competitive stance. So my sense this year and going into next year, investors need to be a little more selective and choose names that are likely and that have historically outperformed the peer group. I don't think this year and next year a rising tide is going to lift every boat in this space. So I think you need to be selective.
We also have Progressive, Chubb, Allstate on the board here. Are they all neutral in your opinion right now, or is there a buy among them?
No, I'm still pretty positive on the group just because I think the industry is going to maintain pricing discipline. The demand for coverage, particularly in the personal line space, is fairly economically defensive. So if the economy does slow, demand for personal line coverage is pretty stable. I like Progressive. They've got best-in-class underwriting capabilities, analytics, a usage-based insurance program that has enabled them to capture a lot of market share. I think a pullback in the shares, or the recent pullback in the shares, is a good opportunity right now. I also like Allstate for many of the same reasons. Allstate is trading at a valuation that's significantly discounted to Progressive, and it's an interesting value stock and an economically defensive one. In the commercial line space, AIG is a restructuring and a turnaround play, and I like that story. I've liked it for a while. I think there's more room there. I also like Chubb. They're a premier, kind of a top-tier commercial lines insurer. Berkshire Hathaway's taken notice of them and bought an equity stake in the company. So, those are a handful of names that I think are poised to outperform in what likely is going to be a little bit more of a challenging market in the next year or so.
So Travelers is not necessarily the best of the bunch right now for you. You mentioned Chubb and AIG and Progressive and Allstate. There's also Hartford and Berkeley and a couple of others. But the theme here is there could be some room to the upside. Property and casualty insurance stocks, as you noted last year, were really sought after. The pricing power that they had then, do they have pricing power this year or next year? Is it hard to say? You've had catastrophes, everything from what happened in California and probably many others that I can't think of at this moment, but look what's going on in Texas just recently.
Right. those catastrophes have come on the heels of several years of double-digit rate increases. So overall industry profitability is pretty decent. And when investors see that, there's a belief that the marketplace will become more competitive. And we have seen that in some of the aggregate data. In the commercial lines market, for example, the latest data I have is on a 1-quarter lag. First quarter average rate increases were a little over 4%. A quarter before that, they were 5.5%. A year or two ago, we were looking at average rate increases of 8, 10, 12%. So pricing has definitely softened. Demand has held steady. I think there are different lines of business with different growth mechanisms. And the one thing to remember, for example, with Travelers, a lot of their book of business is in workers' compensation, which is a very slow growing business. Travelers has done a really good job managing that business and making it profitable, but there's not much growth there. And then if you step back and look at investor appetite for growth over value, and you have an industry where there are some top line growth struggles, I think it's important to differentiate between those companies that are growing above the peer group while also maintaining underwriting profitability. I think those are the names that I've previously mentioned that should have a catalyst.
Yeah, and look, your 285 target is above the high of 277. I mean, I just pulled up a 3-year chart. 277 was the high. So even though you have a neutral rating, your target shows that it could creep higher here. Cathy Seifert, great to see you, Director of CFRA Research. Good look at the insurance industry. Joe Tigay is with us, Portfolio Manager of the Rational Equity Armor Fund. And you have some example trades. Now, you did hear Cathy say she liked Progressive, and we'll get to that in a moment. What about Travelers? What's an example trade for you here?
Hi, thanks for having me. Yeah, just as an example trade, playing a little bit of momentum. Now, this is not exactly a name that I'm going to expect to see running away, racing higher like some of the other growth names we talk about a lot. So this is just something I'm going to continue the momentum, expecting it to continue to go higher, closer towards the all-time highs around the 278, 277 area. So I'm just going to look out to October, and I'm going to look to use some optionality to play it to the upside a little bit cheaper, and I can do so with the 260, 270, 280, 290 iron condor, just not iron, just a regular condor, a call condor. I'm going to be able to get into that name right now for 350, give or take, on that condor. Hopefully it turns into $10. It will be $10 between 270 and 280. It's exactly where I expect it to be in October if we continue to go a little bit higher. So again, just buying a call spread to the upside, selling a higher call spread further higher, just really expecting a range of like a 270 to 280 where I expect it to be, because I don't expect it to race through 280 before October, but I do expect it to continue to go higher slightly.
Yeah, understood. Okay. And look, I mean, Progressive, which hit a high of 292, has really pulled back. It's under 250 now. Does that provide some opportunity? What's your example trade for a name like Progressive?
Yeah, Progressive kind of the opposite way. It doesn't have any momentum. I'd love to see it pick some up. I think it might need some consolidation here after this big pullback. I might need some time getting some support. We were below an area of previous support we saw earlier in March. So I think selling a put is prudent here instead of buying the stock, using some options, getting in the name a little bit cheaper. Looking at the August 245 put, it's kind of wide bid ask, so I'm going to be careful when I'm putting my order in. But I'm looking at selling that August 245 put. Collecting some premium, probably collect a little bit more than $5 to put it on. About 2% return just to sit on the sidelines while I'm waiting for this to shake out here, this bottoming formation to happen here in Progressive. I'd love to see it come higher. The put sale will win if it does go higher. If it doesn't go higher, I have a built-in buying price. I'm going to be in the name around 240 average cost basis. So that's very attractive for me because I do think over the long haul, it will be going higher.
Okay. Joe Tigay, always great to see you. A happy Friday and weekend to you. Joe Tigay, Portfolio Manager of the Rational Equity Armor Fund, with 2 example trades there for you.